Hello, everyone, and welcome back. The shareholders of Tesla gave CEO Elon Musk a very nice pay package of $56 billion dollars at the electric vehicle maker's annual shareholders meeting in Texas on Thursday. This plan was approved. Many people see the vote as proof that Tesla investors have faith in Musk. If you own shares in Tesla, keep watching because this video is full of important new information and insights that could change the future of Tesla and how it affects your investments. We'll be looking at the most recent predictions from ARK Invest, the game-changing potential of Tesla's robotaxi project, and the fast progress being made in fully self-driving technology. We'll talk about what these changes mean for Tesla shareholders and the auto market as a whole, since the company's value could rise to $7 to $11 trillion. Stay tuned as we break down what these big projects might mean and talk about whether Tesla can really go above and beyond what analysts have predicted. Make sure you're subscribed so you don't miss any of our in-depth analyses. Also, click the like button if you're ready to learn more about Tesla's exciting future. Hello, and welcome to Tesla Stock News. Let's begin. In an interesting turn of events, ARK Invest has set a high price goal for Tesla for the year 2029. ARK Invest made this big prediction just 2 days ago, which caused investors to talk and look forward to it. This prediction is making people look twice, and it sets the stage for what could be a big time for Tesla. Now let's talk about a big choice that Tesla's shareholders made yesterday. They agreed to Elon Musk's new pay package and agreed to move the company from Delaware to Texas. This approval comes after a previous court decision in which Musk's 2018 pay package was thrown out because it was too good, which caused a stir about judicial overreach. Some people said this was like what you might see in a more authoritarian government. Musk's typical forward-thinking response was to suggest moving Tesla to Texas, which was seen as a good idea from a business point of view and would be good for the company's future. Along with this, he announced a mind-boggling $56 billion pay package that was meant to meet legal requirements and keep Musk's full attention on the future of Tesla. A lot of people watching might agree that the choice was easy for a lot of shareholders. They knew that Musk's leadership was very important, especially at this very important time. Even though there were a few people who didn't vote in favor, the fact that Musk's vision for Tesla got so much support shows how much people trust and believe in it. It's possible that this move to Texas and the strong support for Musk's new pay package will help Tesla reach even greater heights. As Tesla continues on its ambitious path, viewers still want to know, will these risky moves keep Tesla as the world's most valuable company? Stay tuned because we're still following this exciting journey. Elon Musk said again that he wants to make Tesla the world's most valuable company. Musk's statement should not be taken lightly because of what he has said in the past. Pretty much takes away any worries about the key man risk and the spread of FUD, fear, uncertainty, and doubt about Tesla. Musk is completely focused on Tesla, which has reassured both current and potential shareholders. This has made it possible for more institutional investors to put money into Tesla. Let's talk about what this means for Tesla's future. Musk's new pay package has been overwhelmingly supported by shareholders. This not only solidifies his role as leader but also gives him more power in making strategic decisions. Despite what some people think, Musk's new deal isn't about making money directly. Instead, it gives him options that will cost him a lot of money to buy. With these choices, he will have more voting rights, which will give him more control over Tesla's future. When talking about Musk's drive to be an entrepreneur, think about how he invested in space travel and electric cars after selling PayPal. He didn't do this because he needed the money. He did it because he loved starting new businesses, which is still what drives his goals for Tesla. Looking ahead, let's look at ARK Invest's brand new 5-year price predictions for Tesla, which show very positive scenarios. ARK Invest says that Tesla's future isn't just selling cars, it's also changing the way people get around with its robotaxi service. They think that robotaxis will become so important to Tesla's business in just 2 years that it will overshadow traditional car sales. In the best-case scenario, Tesla could sell up to 14.5 million cars in 2029. This would mean that the company's gross margin would skyrocket, which could raise its value to as much as $11 trillion. According to these predictions, Tesla will not only continue to be the leader in making electric cars, but it will also become the leader in self-driving cars. This change in strategy could have a big effect on stock prices, giving Tesla a market capitalization that has never been seen before. Those who don't believe in Tesla's potential may get a big wake-up call in the next few years. As we watch these events play out, one thing is becoming clear. Tesla is not only heading toward profitability under Musk's leadership, but also toward historical significance in the tech and auto industries. Elon Musk says that Tesla's shareholders agreed to his $56 billion pay package. Even the CEO of Tesla thanked them in a post on X, which used to be called Twitter. The shareholders are also likely to agree to a plan to make Texas the company's legal home. Musk's $56 billion salary, which was first agreed upon in 2018, is the biggest pay package in the history of U.S. companies. ARK Invest sees Tesla's robotaxi project as a potentially revolutionary force for the company that could have a big effect on how much it's worth on the market. This hope comes from the fact that self-driving cars have the potential to change everything and that a fully operational robotaxi fleet could bring in a lot of money. According to ARK's predictions, this new business model could help Tesla make a lot more money by letting them make high-margin recurring revenue from service-based models instead of just selling cars. But ARK also sounds cautious, recognizing the risks that come with being on the cutting edge of such advanced technology. If the robotaxi project is held up or doesn't get the necessary approvals from the government, it could change what was planned. Even so, ARK thinks that Tesla's share price could still double in the next 5 years, even if the robotaxi service doesn't start up. This prediction is much higher than the average growth of the S&P 500 over the past few decades. This shows that Tesla's fundamentals are strong and that there is strong demand for its core products. Tesla's chances are also improved by the fact that it is growing the full self-driving SSD database faster than anyone else. RK says that Tesla is gathering data on real-world driving 110 times faster than its closest competitor. This huge dataset is not only useful for research purposes, but it is also a key competitive advantage that could help Tesla's self-driving technology develop faster and be more reliable. One interesting thing about ARK's analysis is that it looks at what was left out of the valuation model. Tesla's humanoid robot Optimus and other contributions from the energy sector are noticeably missing from the list of possible effects. The model also doesn't take into account the money that could be made from FSD licensing, which could be a big business chance. Because the product is based on software, licensing Tesla's FSD technology to other companies could bring in a lot of extra money with very high profit margins. The ARK model says that Tesla's value could reach between $7 and $11 trillion even without these extra factors. But if FSD licensing is added, it could make self-driving technology more uniform across the industry, which would make Tesla's value go even higher. The licensing strategy would not only confirm Tesla's position as a leader in technology, but it could also turn the company into a hub for self-driving technology, which could cause its market value to grow at an unimaginable rate. From the point of view of fundamental analysis, Tesla's finances look very good. Tesla's sales have grown by an amazing 160% in the last 3 years, showing that its products are becoming more popular and reaching more people. The 1,000% increase in net income is even more impressive and shows how much the company has improved its profitability and operational efficiency. This incredible growth rate shows that Tesla is able to successfully expand its business model while keeping its profit margins high. Tesla's stock is often thought to have a high price-to-earnings P/E ratio, even though these numbers are impressive. At first glance, its share price may look high compared to other auto stocks or the market as a whole, but these numbers show where Tesla stands in the market and how much it can grow. Investors often put a lot of value on companies that have great growth prospects and technologies that will change the world. So Tesla's P/E ratio shows that the market believes in its long-term goals and the ability to scale up its technology, especially when it comes to electric cars and self-driving cars. Also, Tesla is in a unique position because it can consistently come up with new ideas and lead the way in the electric vehicle (EV) market. Its cutting-edge technology and growing product line show that the company's investments in research and development have paid off. This forward-thinking approach has not only won over loyal customers, but it has also sparked a lot of interest from institutional investors who want to see the business grow over the long term. Additionally, Tesla's financial plan has been sound, as shown by its strategic reduction of debt by 20% and ongoing improvements in the management of cash flow. This has strengthened its balance sheet, making it easier for it to invest in new technologies and make more products without putting its finances at risk. The company's gross margins have also gone up, which is a good sign. This is because of better cost control and more efficient production. Even though Tesla has a high price-to-earnings ratio, its valuation basically shows that the market understands its fast growth and how it will change the auto and energy industries. For investors, this shows that real innovation and market leadership often cost a lot. This makes Tesla a great investment opportunity for people who want to put their money into the future of technology and clean energy. There you have it. Today's in-depth look at the exciting future prospects for Tesla as seen by ARK Invest, from the revolutionary potential of robotaxi, which could completely change Tesla's value, to the strategic importance of Tesla's fully self-driving technology and its huge data collection, which is ahead of all competitors even if these big goals aren't fully realized.